So let's just touch on an overview and the change in law. As you can see from the green line moving forward here, exemption came into play, and then after that, exemption was removed in compliance with the OECD guidelines. But of course, we have this 5 years kind of like a transition period. RB came up with this guidelines. There were 2 guidelines, one in 29 September. Then after that, the latest one was 29th of December. So this is the one that we're going to rely on in our presentation. In fact, not much changes, only 1 or 2 matters that honestly doesn't impact us individuals, but more on the companies, LPs, and partnerships. This is what the law says, right? 1st Jan onwards, resident person, income derived from foreign sources received in Malaysia, it will be subject to tax. So this is essentially determination of FSI in a nutshell. So we will go into its components. Component number 1 is, of course, tax resident. It talks about management and control. It talks about residents, like individuals, people like us. It doesn't depend on nationality or citizenship of the taxpayer. You could be a foreigner, you could be someone who is here on MM2H. It depends on the number of days whereby you're physically present in Malaysia in a calendar year. Next, of course, is the interesting one, is the remitted receipt. What do you mean by that? This has foreign source income implications when you bring the money back. So it's physical transportation of money into Malaysia, even through telegraphic transfer or electronic transfer, remitted, received, or deemed received. So this amount which is already contract off in the books is also deemed received here in Malaysia. It also includes this transfer of fund into Malaysia to creditor in satisfaction of debt. There's this distinction which is foreign income derived in Malaysia or derived from Malaysia. Point is that actually you are earning this income from all these foreigners while you are here in Malaysia. Your place of business essentially is here in Malaysia. Your place of activity is in Malaysia. So therefore, this is income derived from Malaysia right from the very start. So if you fall within this category, meaning to say that you could have inadvertently, mistakenly, unknowingly omitted to declare your income already. Also, same thing about foreign employment income derived from Malaysia. Especially right now, partly thanks to COVID, so you're free to work from anywhere you like. You can choose to work in Malaysia. For a Singapore employer, the income that you earn is taxable here in Malaysia. Component 3, capital versus revenue receipts. Foreign bank investments, you got returns, got proceeds. Then of course you bank it here, then you remit it back. So once you remit it back, if it's capital, then it's not taxable. But if it's revenue, then it is taxable. Another implication that you have to worry about is this, you can claim it's capital as much as you like, but the problem is in establishing to the IRB at the end of the day, it really is capital in the first place. And did you declare this income to the IRB? Now, we talk about the exemption on foreign source income. This is effectively the summary in a nutshell. Let's look into all this kind of exemption criteria. In the summary, all types of FSI for individual, qualifying individuals resident in Malaysia, bring back the dividends, interest, and this is an important condition. The FSI must be subjected to tax of a similar character of income tax. That means it must have been subjected to tax in the first place, or not subjected to tax in the country of origin due to this kind of situations. Just to give you some examples, this is extracted from the IRB's guidelines. Okay, this one is a little bit about companies and LPs, a little bit different. This is your definition of qualified person, and this has everything got to do with dividends only. Very tight kind of conditions for you to fulfill in order for you to be able to say that this is exempted. It's 3 conditions, A, B, and C, all must comply. So as a summary, individuals, all sources exempt, and for this category, dividends only exempted, but has got to fulfill all these things. And how does the law now affect the Malaysian taxpayer? The problem with us individuals is to identify and segregate the nature of income remittance into Malaysia. Record keeping must be good, must be strong, I would say that, as far as under this FSI jurisdiction is concerned. Remittances, identifying recording actual remittance and deemed received in Malaysia. Bilateral and unilateral credit. To claim a credit in Malaysia or tax suffered outside Malaysia, you must maintain records, and it must be claimed within 2 years of assessment. This, again, I need to emphasize, evidence, record keeping, accounting entries. So what's your game plan? Evaluate the sources of funds to generate the FSI in the first place. The availability of evidence to support your investments outside Malaysia must be strong. And then plan remittances so that the FSI does not adversely push you into a higher tax bracket. Track remittances from outside Malaysia to Malaysia on an annual basis. Maintain records, of course. Evidence to support capital portion and revenue portion is important. So foreign tax returns, notices of assessments, and tax payment receipts are very important for you to claim the bilateral relief. So considering income, declaring income previously thought to be tax exempted actually derived from Malaysia. Moving forward, we have this voluntary disclosure program. Yeah, do take note of that. Do take advantage of that.